Good afternoon, traders. This is Christian Farmer. It's Tribeca Trade Group, and this is your end of day as well as end of month recap for the end of February. It's the 29th leap day, as some refer to it. And, really interesting. I heard a couple things today, like the stats, leap years are supposed to be pretty negative. I think something like the S&P is down like normally like 70 basis points or something like that for leap years. And today we get a really strong day. So and I think that kind of just set the tone, or not set the tone, but kind of just wraps up the month of February, which we heard is supposed to be a very seasonal weak month, especially the last 2 weeks of February. And it was a hugely strong month. So it's, in my opinion, it is like to have seasonality and in the back of your mind, or a factor about what parts of the year are stronger than others is important, and you'll probably hear me quoted a couple times in March too. But it's definitely not the only factor that's out there. And in fact, it's not a very important factor in what I do, which is really, following the price action. And, price is by far the number one indicator. And I stress that every time, for Tribeca Trade Group members, I do a weekend macro video, every Sunday. And I talk about the number I literally say it every time I'm going over the charts. First, I say we're going to look at a couple different indicators. We're going to look at the hood, but number one always to me is the price action, right? We can begin to kind of look under the hood for hints, right, and know a little bit about factors, such as seasonals, but ultimately it's the price action that's most important. And I don't make a lot of decisions if the price action continues to be strong, right? And that's really something that we saw all month long. And it was kind of crazy, I think, too, because I saw a lot of people talk about, oh well, this isn't good and the breadth isn't strong. And I started I think at the beginning of the month I started to kind of take note of that and say, okay, this isn't optimal, in terms of what we were seeing, where I was looking at, really kind of dug in every day. And readers of my Substack know this, because every midday note you get the S&P 4-week new high list as well as the new lows. And I put a little summary in there every single day, right? Where I talk about, are new highs expanding, right? Or are new highs, starting to deviate, right? And are new lows picking up? So you have this, right? And this part is even like free. You could subscribe and get this for free, but like here's today's, right? So I mean, I get the point about, like, really scrutinizing the market and so forth and doing your analysis, but you don't want to just complain to complain. And I really saw a lot of that, and it was more distractions, right? More like poor analysis for people who are complaining about that there wasn't enough stocks going up. And I look at the summation index too, and the NYSE summation index too, to see overall. But like, if this troubled you, seeing the majority of, and again, this wasn't every day where we saw this, right? But it was a good portion of, probably every day. Sorry, I shouldn't say every day, because that's not true, but at least a few days of the week, I talked about probably 3 or 4 sectors. Number one, the industrials, right? Number two, the financials. Number three, the consumer discretionary really picked up. And then we started to see material stocks start to kind of pick up in terms of breadth. Now, of course, the tech wasn't one of the big ones for the last, for the last week or so. But again, look at the size of the new 4-week lows, right? And that's the same, by the way, when we look at the overall breadth. Sorry, when we look at the overall highs and lows for the S&P for 52 weeks as well. So again, I tend to look at the 4 weeks because sometimes I can derive some signals. But here's 65 new highs out of the S&P today, and 1 new low. So I get it. Some people you get more clicks if you talk about, oh my God, this is the next thing to worry about, and so on. There's always going to be things to worry about. But you know, I'm very happy the way that I trade, you know, very content the way I traded February, and you know, really kind of honed in on the signals that I should be honing in on. And by the way, risk disclaimer in front of you, everything we're talking about in this video is for information purpose only, not giving out any advice or recommendations. So I will talk about a couple stocks that I thought were interesting towards the end of this video, but you know, I wanted to talk about you know, and so we'll talk about AMD and NVIDIA and Celsius, but I want to just go through a quick summary of the month. But here, you know, so here's what the month did, and it's pretty crazy because and I'll blow this up a little bit for you so that you could see the numbers a little bit more clearly. But SPY Qs, as well as mid caps, IWM, they were all up over 5% for the month. So you didn't have to be that picky in terms of the index. So really impressive. When you look at the year at this point, because I also like to look at year to date. But the Qs are still leading, right? Even though like started to see it kind of lose momentum a little bit, but they're still leading up 7.2% year to date. Then SPY is not far behind there, up 6.8%. Of course, the small caps are only up 1.4% year to date. I'll come back to these numbers in just a second because I think that there's an interesting surprise in there, which I mentioned when I just tweeted this out, that there's some surprises. But I also wanted to go over what. So you just have to bear with me. Here's month to date in this column, and it's going to be a different column when it goes into sectors. You know, again, I really tend to look at what bonds were doing and what the dollar was doing, just in case anything is really upsetting the apple cart. TLT was down 2.2%. But really has kind of hung in there the last 5 days. It's actually somewhat positive, up 0.3 of a percentage point. So again, it's something that we're going to have to keep an eye on. That's not going to go away, and you know, we're going to have to really pay attention to what bonds are doing. We don't want to see a breakdown. We haven't really seen a breakdown yet. It's been close, but it's been hanging in there. And I think we're so close to that. You know, I think it's going to be important to watch. The dollar was up a little bit this for the month, but most of those gains were in the beginning of the month, up almost 1%. So again, you know, it's up, but not screaming higher. Right. And I think overall the same thing for bonds too. They were down, meaning interest rates went higher a bit in February, but not screaming higher, right? And you know, if you want headlines, you know, I guess you could try to be more dramatic about that. But I'm not really, I don't do that, right? You know, I don't exaggerate numbers. Numbers are what they are. And I think like under 3%, you know, if it's over 3%, that's something. It's under 3% for both of those moves in the dollar and in bonds as well. All right. So again, we'll get more concerned if we need to be, right, for those areas of the market. Let's talk about what were the best sectors for the month, right? So like I said, just bear with me. You have to go to this column. I have it sorted a little bit different way, but there's a couple of surprises in here. So number one, you know, really the cryptos took off. The BLOK ETF is the one that has the companies in it. So your MSTR, your Coin, your Mara, right? Your Riot, right? Your Clean Spark as well, which what a ride for that stock this week. But overall, you know, had a huge month, up 24%. Talk about momentum in that group. Also, you know, the semis, which we know a lot about, of course. NVIDIA really had a big month. So did its things like SMCI and ARM, and then AMD today really picked up the pace today. But that group was up 14% this month, and that makes up 21%. I think for year to date, yeah, 21%. I mean, that's huge numbers, and you know, again, you look at this, right? And you know, as much as I've heard some chatter about, oh my God, the consumer staples are up. Okay, so what? The semiconductors are up 20% year to date and up 14% for the month. So again, sorry to reiterate it, but those are big numbers, right? Not the consumer staples, which were where are the consumer staples? Up to, oh my God, they were up 2%. Does that scare the hell out of you? Up 2%. So again, we're not creating fear here. I'm sorry to be a little bit dramatic, but that's just a big number, right? So what are you focused on, right? That consumer staples were up 2%, or that semis were up 14%. I think there's some big things that happened this month. Also, when you go further down the list, right? Biotech, right, had a huge number, even though it sold off quite a bit. I think it really sold off a bit because everybody started tweeting out the chart when it was at the highs. We've been riding that biotech trade over the last month, so we did really well with that trade. Again, people tweeting it out the last couple days, and I get it, it's exciting, but the evidence was there and the momentum started way earlier than 2 days ago. So it was really nice to do the work, right? Right, that's what's important. Like when you put in the time and you put in the work and the analysis, and then it really works out for you, that is something to get excited about, and I do relish that. I relish being, finding these things early, spending a lot of time doing the research, and so on and so forth. So here's one of the big surprises to me. Look at the next one down was retail, right? XRT, this is the equally weighted retail ETF, up 11.5%. Right now, that has everything in it, from Carvana to Abercrombie and Fitch, and a bunch of other small retail companies too, because it is equally weighted, right? And then the transports, it's hard to get to come up with negatives when you see the transports up 9% for the month. Now, again, this is very different than the Dow Jones Transportation Index, but I've went over that in a previous video. That is, if you look at the constituents of what is in that index, you could choose to go by it, but I'm not going to choose to go by it because I don't think it's a very good representation of the transportation group. It doesn't cover XPO, which is a straight up transportation company. It doesn't cover SAIA, which had a huge earnings report and a leader. It's not in the trans index. I'll tell you what it's in. It's in the IYT, as it should be, right? Now, again, there's also the Uber and Lyft are both in the IYT. Uber's coming to the trans index, but man, that is a bad index to track, in my opinion, right? And that's, by the way, that's the flexibility that we have in markets. Like, nobody's putting a gun to your head and says that you have to look at the price weighted Dow Jones Transportation Index, which only has 20 names in it. In any event, the Chinese internet names had a good month, right? Now they're still down 6.1% year to date, but they had a nice month, up 8.6%, right? The home builders also, had a good month. They were kind of quiet for I guess in January, but up 7.9%. Started to see some new names make some highs. Toll Brothers, Lennar made a new highs. I got into a Pulte trade today. Was waiting for that one to kind of break higher. The industrials, which I've talked a lot about, were up 7% for the month. Very strong. So are the materials, right? So again, tech is not on the high of the list, other than the semis, not high on the list. But based on what I just talked about for the last 5-10 minutes, there's a lot of strength in this market, and I get it, right? The Qs and tech had a huge year last year. Give them a break, right? They can't just go straight up forever. It's okay for them to consolidate. And really, I think that's the strength of a bull market, when that top group doesn't perform as well, but meanwhile, there's 5 other groups that come up and start performing really well. All right, so let's talk about what didn't perform well. The gold miners, down 5.6%. Right, the banks didn't have that great. Both the KBE Bank Index, which is all banks, and the KRE, which is regional banks, down 3%. Right, and now down 8%. Right, they're having a tough time. Interesting, by the way, when you look at the difference, and people don't look at this, but they should, right? The XLF. So how is the XLF up 4%, and meanwhile the bank index was down for the month, right? Well, it's because XLF doesn't just contain banks, right? It contains a big portion of the XLF is insurance companies. It also covers, I believe, the exchange stocks are in there, right? And I think a couple of the private equity companies are in there too, right? So a lot other things, and that's why I wouldn't really want to be long some of those groups. I do like the private equity groups, and I do like, and I've been overweight the insurers. All right. So there you have it in terms of performance. So I mentioned in the tweet that I sent out that there was a couple surprises. I thought the retail stocks were a surprise, right? I thought a couple of these things were surprises. The other surprise, and this to me is the biggest to me, just because it's kind of crazy. But if you look at the ARK Innovation ETF, right, up 13%. What a February this ETF had, right? And they're overweight. If you look at what they're holding, they're overweight some of the crypto names, which certainly gave them a boost, because that was your best. As we went over, those stocks were the best group this month. But look at they're still down 2.1% for the year. So they definitely outperformed this month, but they're still underperforming year to date. So to me, it's just amazing the volatility and the swings that has. And look at the contrast, by the way, the IBD 50 ETF, which had a real nice month this month. That's got to be one of the biggest months it's had. Probably, I don't know what it did at the end of last year, but if it didn't outperform that in either November or December, it probably is the biggest month in a couple of years, I think. And then that brings that ETF about up 13% year to date. Growth versus value, growth still outperformed and is still outperforming. That trend's intact for the year as well. It gets a little bit different when you look at small caps. Small cap growth is up 4.5%. Value is down. So there you have it there. That sells wrong. I don't know why I've got that color coded the wrong way, right? And there's bonds in the dollar, which we already talked about. All right, so let's talk about, we'll go through a couple charts really quickly. And by the way, my performance, which I tweet out, I've now been tweeting out, I was looking at this earlier because I was making a couple jokes in the trading room earlier, but I've been tweeting out my monthly numbers now for 4 years on Twitter, right? You could go back, you could search, you could go to my Twitter handle at CFromhertz, and put in just PNL, and you'll be able to see 4 years back. Every month I've been tweeting that out. I believe I am the #1 person. I don't know anybody on Twitter. I should start putting that as I'm the title holder of putting out my results. And I don't do this nonsense where it's one day. I never tweet out 1 day of results, right? That is for the pumpers and the people who try to fool one another, right? Those people, by the way, who tweet out 1 day, I never see them tweet out their month or their year-to-date performance. So I call that like Fugazi traders. Regardless, I continue to put out my numbers. Maybe eventually I will stop doing it. When I decide to do something different, then I won't tweet out my numbers every month. But here's my performance year to date. I'm up 12.7%. I had a very good February, and I always provide a monthly video for members where we talk about best trades, worst trades. I always talk about the losers first, right? Because those are the things that I want to correct, right? And basically try to improve upon. All right. So I always start with that. I always analyze the trades that didn't go well, right? Because we can only have 5 types of trades, right? We're either going to have a big winner, right? A small winner, right? And this is every trade that you enter is going to enter these 4 or 5 ways, right? So number 1, which we all want, big winner. Number 2, small winner. Number 3, small loser. Number 4, a big loser. And number 5, I guess, is like being flat on the trade. But so technically, I guess there's 5. But what we really don't want is that number 4, right? We don't want the big losers, right? And I will be wrong a lot, and I take off trades. Even like yesterday, I did not have a good day. Right? I had a very frustrating day. A couple of trades that just didn't work, and I cut I try to just cut my trades for small losses. You don't want a lot of small losses because those will eventually add up. But the paper cut losses are not going to, as long as you're mixing those in and you've got plenty of number one and number two trades, right? Then you're going to be okay. All right. And that's another thing too, right? It's okay to be wrong, but not to stay wrong, right? It's a big stumbling block that a lot of traders have to get through. I also manage what's called the TTG trend portfolio. That is up, that's kicking pretty nicely too, up 11.8%. That is geared towards longer term trading, but still follows a trend. Right. So I have those too, especially for part-time traders. And here's where we are year to date, which I already went over. Let's just go through a couple charts really quick for the day. So here's what the S&P did. I thought that this was very interesting. All week long, we were just kind of hovering around this top of value, but the MarketWebs did a good job and held in here. Right. I even drew this little trend line, which looked like a bit of a head and shoulders top in the short term, but we really didn't fall, and this held in fairly well. All right, let's talk about just a couple stocks, and overall, let's back out to the daily chart. As I've mentioned a couple times this week, there's not a lot to really super analyze on the daily chart, right? We had a few days of a little bit of downward biased digestion. Right. I mean, how much are you going to analyze this stuff? I don't think it makes that much sense. The Qs, yeah, I would be interested to see if we take out the highs. Right now we're kind of struggling. I don't want to, probably not struggling is the right word, but we just haven't been able to take out those highs. But the trend is intact. Right, the 5 and the 20, and I think you could try to kind of convince yourself otherwise, but for now, I think letting the 5 and the 20-day moving average be your friend here. Also, you'll hear me talk a lot about the March value area, which it looks like Qs will be right at that top of value. So yeah, it's going to have to contend with a little bit of resistance, right? And here's IWM, just sitting there close to those highs. I do think it's going to need a little bit more help from TLT, right, which I already talked about, how TLT is kind of held in there this month, right, and did not break the value area. So that's sideways is fine for me, overall for TLT. I don't need to see it really rally. I just really don't want to see it break down, but I'm a little bit different than everybody else. All right, so I mentioned a couple things, but let's start with NVIDIA. Those are the one I started to trade today, and I was watching this name yesterday. It did get over its value area, so it stayed. It held in here. So I'm in a trade for now. I took one target in the trade, just to lock something in for small gains. But really, it was super impressive with AMD. And I can't really tell you why, because I stick to names that have really good quarters. And I would argue that AMD did not have such a good quarter. However, maybe, it's, like many stocks do, they run anticipation of what's coming up for them. Now, maybe they're going to come up with a new chip or try to catch up to NVIDIA. So even though they're a more expensive company than NVIDIA, I'm not going to argue with a breakout. So I went long. I did not go long a huge position. I didn't catch it right in the beginning break, but this is the first day of the breakout. So I'll stick with it. And if the trend of something changes, then I'll, change. But even though, I don't have to understand everything to make money, right? So I don't understand why this name did so much better today than NVIDIA, because I think NVIDIA is better, but hey, that's my own personal feeling. Again, I tend to stick with the names that had really good earnings, right, and that are growing. But it is what it is, right? Celsius was, and it's crazy. What the other thing that's really kind of crazy about this market is we're just seeing this. By the way, sorry about the sun. I'm in downtown New York City, and I get the sun reflected off the different buildings, and I don't have my shades down, otherwise it would be too dark in here. But look at the move in Celsius. So what I really liked about Celsius today was just the technical spot that it's in, right? It's been kind of flirting a little bit with this top of value, right, which is the value area for the whole year. Again, you could see this on, even though I'm on the daily chart, you could see the value area for the year, right? And that's a big break. So yeah, I mean, look at the volume. right? How many stocks have we seen over the last 2 weeks that have done something like this, where they just break on big volume? Now, what's nice about this is you have no resistance anymore in front of you. So I would much rather trade a stock like this versus a one that's like all the way down here, right? And has to battle through all that overhead supply. So I thought that was really incredible. A couple other names that I'm watching, just to kind of give you a more roundabout situation here. I'm watching Emerson. I know it's more of a boring type stock, but this saw some calls today. And again, I really like what the industrials are doing, right? And they have been showing some great breadth. Another area that I'm watching is the healthcare space, right? Healthcare. I unwound a trade last Friday. I had really good timing on that. And I'm watching to see what this is going to do here, because I still think that the trend, I like to buy names or groups that are in defined uptrends, right, that are pulling back. Right, so nothing to do yet. I want to see what it does with that 20-day moving average. But again, as much as I like to trade a Celsius and the semis and so forth, right? I'd like to have a couple slower moving names that I can kind of have as a swing trade for a couple weeks to a couple months, right? As long as the trend stays intact like this. So that'll be on my list for tomorrow. Many more names to talk about, but I'm going to cut the video off here. Guys, have a great night. And I talked a lot about Tribeca Trade Group members and how I share P&L, and I'm transparent, every day, every month. And I really try to work hard for members. Here's how you become a member of Tribeca Trade Group. I mentioned earlier this week I'll be bumping up the monthly fee. I kind of helped. I actually reduced. So what I did last year was I reduced how much I was charging back in October. Why did I do that, right? Back in October, why did I reduce my fees? Because I wasn't performing as well as I should have, right? And I said, hey, how could I charge people for something when I'm not performing that well? I also recognized that the market was really difficult for 3 months, right? July, August, September, right? And but now, we've had a good now again, I've been trading a lot better. I've been really sticking to my rules. Obviously, the market has helped too. So I increased my price when, everybody can afford more when we're doing well. And if the market goes to, does not do well for 3 months, I'll probably bring the price back down again. Right. I think that that's fair. Right. And again, I don't know how many people tweet out their results month after month like I do. And they also do these adjustments to their to their pricing. Anyway, guys, have a great night. Thanks for watching the video, and look forward to the challenges ahead for the month of March.